Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Chicago wheat and corn. Chicago wheat. In the past, I'd highlighted here on my daily chart two bearish patterns. The first was the early November 2022 to February 2023 bearish Andrews pitchfork. The market has mainly been between the upper time, currently at 596, and the middle time, currently 532. The upper time had before June been breached on many occasions, but it was only broken this week, which is why it is no longer highlighted, and why it will likely be retired next week. A second newer pattern was a bear channel, currently 555 to 633 for the February to date action. Now, this is still highlighted on my daily chart in bright red, though I will likely reduce it if not eliminate it altogether next week given this week's actions. The upper channel line had been especially significant given how it had been in lockstep with the declining short medium moving average, currently 653, between late March until late May. Needless to say, their combined bearish pressure would have been greater than each one individually. Finally, we had a weekly key reversal down 3 weeks ago with a limited follow-on lower until the week before last, as prices did not manage to get any lower than about the March 2021 low at 592 before reverting back up again. Thus, the bearish pressure had dwindled by then, and what there was had been met by a series of layered supports stretching below the market. Thus, this week, we have seen prices not only exit up and away from the bear channel, but also push over the short-medium moving average, the medium moving average, which is currently 688, the January 2021 high at 893, and most important of all, over the 50% absolute Fibonacci line at 682. The move up over the 50% absolute Fibonacci line is intrinsically important, but is also important as it is the gateway to the congestion band from March to April, between about 682 to 721, within which are the January 2021 high at 693 and the old October 2013 high at 721. That is not all. Above this is another congestion band dating from December last year, December last year through to February this year, between about the March 2014 high at 725 up to the lesser Fibonacci line at 799. And containing the January 2022 low at 739 and the May 2014 high at 744. This is what we have above the market. But there is also the possibility of a new, larger pattern here, a February to date, and possibly even an October 2022 to date descending scallop pattern. This one is still in its infancy, if it was to develop as such a pattern, but the opportunities are still there. The first level to watch and see if it develops is right around where we are in the 708, the 708 area. The second, that would be higher, around the mid 780s. Now, more on this should it develop. I just wanted to give it a heads up just in case. Chicago corn. The obvious feature here is no longer the obvious feature. The huge gapping move lower 4 weeks ago has been filled, though it did leave a small gap below, a new gap made this week between 527.5 and 529.75. The key level was a congestion between 502 to 491, with the 2021 low at 498 within it. This congestion finally halted the decline. So what have we seen since? Well, prices have punched up through the older congestion at 548 to 556, and then again at 561 to 567, like they were not even there. A truly remarkable feat. We're now into a more recent congestion from early May between 580 to 600. But this congestion, apart from being recent, is also not that strong. It would not be surprising to see a move higher towards the wider band of stratified congestion from February through to April, between 610 to 640. Beyond that comes the first big, significant longer-term resistance, the 50% Fibonacci line of September to May 2023 move at 655. In between any attempt there and where we are now, I hope we can see a new pattern emerge, perhaps a skeletal descending scallop pattern, such as we've seen in other markets, but it's too early to see right now. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.